Hi, morning, Shreyanshi. So, we have two interesting notes coming out talking about, particular sectors and stocks in focus. Now, what we are firstly seeing is Goldman Sachs. Now, what they've essentially highlighted, they've given a three-case scenario in which in the first scenario, they've given products coming down from the 12% rate to 5%. In case that happens, this would be positive for companies like Nestle, Imami, as well as a Dabur. All the packaged food products also would be something that would be positive if they do come down to the rate of 5%. It would be positive for Britannia, Nestle, Varun Beverages and Tata Consumers in addition to Imami and Dabur as well. So a lot of these FMCG consumer goods names that we are seeing popping up. Other than that, we also have mass consumption FMCG products also coming down to 5%. So this includes even a wider bracket. This includes the likes of something like HUL as well as Marico as well as Godrej consumer products as well. So that is something that, we can keep our track on how, overall consumption boost also would aid the demand scenario for majority of these FMCG players that we are looking at. On the other hand, now Jefferies has also come out with an India strategy note in which they've given an outlook in terms of, what could this mean for the rate cuts also that are there. Now, they do expect that the government expenditure will slow in the second half of this financial year. Now, they've given that conversion of GST cess into GST should help the GST rationalization process that we are looking at without impacting the fiscal much. In fact, they are saying that they expect the GST rate cuts to be more deflationary in nature, potentially creating more room for RBI to cut rates. And the expectation is that they are seeing about a 25 basis points of a cut in likely. And this is also with a possibility of 50 basis points, but they cannot rule if growth slows down materially, because if you look at, what's happened in terms of the collections, in terms of tax, now that has slowed down comparatively. This is also on the account of the income tax regime change in terms of rates that were there in the budget earlier as well. So this could have an impact in terms of where the government expenditure is concerned. So these are the scenarios that they have pointed out. On one side, while we are seeing a overall positive stance for majority of these FMCG plays, something that we should keep a note of on how the government expenditure would pan out going forward in this year.